Ever wonder why some businesses get approved for $50,000 or even $250,000 in funding, while others get denied instantly? It's not about your credit score. Yes, I know that's super important too if you watch some of my videos, but the banks also have a checklist. And today, I'm going to be giving you the inside scoop so you can stop guessing and actually start getting approved. If you're new to my channel, my name is Chess. I've secured well over 400K in total business funding for my businesses, and I help business owners and entrepreneurs just like yourself secure funding for their business as well. So that's how you know everything I teach here is based on real world experiences, either from myself or from my clients' experiences as well. Now, let's start with something small that makes a huge difference for you. If your business bank account is just sitting there with no activity at all, that could be a huge red flag for the banks. But this is because banks want to see consistent usage, ideally anywhere from 5 to 8 transactions per month. It doesn't have to be huge purchases, just some type of movement that shows that this is an operating account for your business. I recommend having auto pay for your software or lunch for your teams, or maybe even small vendor payments. All of that counts. And also, don't forget that to for you to keep a balance above the minimum in your account. Dropping below that, it makes it looks like you have a financial stress, and that actually works against you. Next up, we'll talk about how you can describe yourself when you're applying. If you're running a business, don't ever label yourself as you're unemployed or self-employed or maybe even business owner. Even though it might technically be true for you, it also creates doubt in the eyes of the lender. Instead, what I would do would be to position yourself as the CEO, the founder, or even the contractor if you're not on the payroll yet. And even if you are on the payroll, that's even better for you. You can just say you're an employee of your own company. That not only adds credibility fast for your business, but it also makes you seem very reliable. Now, even if your business structure looks completely solid, the banks still want to know if you understand your business. They want to hear you confidently talk through your revenue, your expenses, who do you serve, what's your customer base, and I guess the most important for them would be to for you to know how you plan on actually using the money to give you. Now, look, if you stumble across those questions or you also sound unsure when you're answering those, that's when the banks are quietly marking you as a risk, even if they don't tell you this directly. Now let's keep going and talk about the numbers, specifically the revenue of your business. Now, I know you've seen those videos telling you to inflate your numbers, where they tell you just put 800K in revenue. They won't check. I recommend to not do this because banks do compare your answers to the industry averages, your zip code, your time in business, and even your personal credit limits for comparables. And if you say you're making half a million or even more than that, and your highest credit line is only $2,000, that doesn't quite match up with the banks, huh? They won't give you 50K if you only have $2,000 in limit. So I recommend always reporting your numbers that you can stand behind. I will do some research on the industry you're in and also the average revenue that they make per year. That way you have a good numbers to use for the revenues that make sense in your industry type. And while we're on that topic of applications, let's talk about what you select as your loan purpose. And this might seem small, but it's actually a lot. Saying paying off student loans or any type of debt consolidations, it usually triggers some kind of risk with the banks. Instead, I will go with answers that shows that you're investing in growth, any type of growth in your business, such as like marketing, equipment, inventory, or any type of business expansion. And that's the type of answers that positions you to be a builder, not a borrower in distress. Now, here's a quick but critical detail that a lot of people miss. It would be to make sure that your applications matches exactly what's on your legal documents. So if your business name is ABC Solutions LLC, but you write CBA Solutions, that could trigger a fraud to the banks because it doesn't match. So what I recommend you would be to bring your articles of organization, your operating agreement, and also always review what the bankers type in before they hit submit when opening up your bank accounts or when you're submitting applications. Another piece that a lot of people never hear about is how much credit the banks are actually willing to actually give you. So every bank has its own internal limit. They don't always tell you this, but it's always there. And let's say your exposure limit is at $60,000 and you already have $50,000 already with this banks. So I wouldn't expect a huge new line of credit. They'll probably give you something a little bit small or they'll probably pass altogether for you. But here's the good news. If you do have business partners, some banks they calculate limits per person. That means you could double dip and spread the credit across multiple owners. That way you could get access to a lot more overall funding for the business. And on that note, applying for too many accounts too quickly can hurt you, even if your profile is strong. But why? This is because many banks they use the same kind of back end underwriters and they also pull from the same bureaus as well. So if you're thinking that you're applying at five different banks, the system that all the banks use, they all see them as one big pool. And when that system sees back-to-back applications, what does that indicate to them? That makes you look desperate, and the key for this all is to space things out and also apply strategically. So let's shift gears for a second and talk about switching business structures, like moving from a sole prop to an LLC. And you don't have to start over just because your entity changed. We've helped clients do this the right way by linking their sole prop history to their brand new LLC. They're in the same industry, they have the same merchant accounts, same city, same residential or business address, and we also use the same bank account statements. And the client was able to have all the receipts to back all that up. That way, the bank treated it like a rebrand and not a complete restart. And that made a very big difference in the approvals they got compared for a brand new business to a very old business. So here's the big takeaway that I have for you. Getting funded isn't about tricking the system or copying what someone else did. Everyone does have their own unique situation. Your business is different and your credit is different as well. It's about presenting your business in a way that matches what the lenders actually want to see. So what I would do would be to keep your business active, know your numbers, don't overreach, and I will also make sure that everything is on point from your paperwork to your purpose of your business. Everything on there lines up correctly. That's how you stop getting denied and actually start getting real approvals that builds up over time. So if you do need one-on-one help to secure 100K plus in business funding, or you want this completely done for you, you can apply to join my mentorship or my Done For You program in the links in the description below or in the pinned comments below as well. This is CashflowChes. I'll see you guys in the next one. Peace.